has really been the flavor, and that was the case yesterday. Let me welcome on board A.S. Sahney, the chairman at IOC, joining in on the show right now. Mr. Sahney, morning. Great to have you on the show with us. And firstly, wish you and your entire team at IOC a very happy and prosperous new year. To begin with, Mr. Sahney, I want to talk about crude. It's been more or less stable all through past year. It's fallen marginally around 4 to 4.5% or so in the quarter, however. How do you see GRMs play out for you in this quarter?
First of all, to all your viewers and to your team, a very happy New Year 2026. We are very happy to be here. Regarding the crude prices, I can detail it out into three parameters. First of all, you are aware, it is demand supply, and the demand is rising by at least 1% or so universally. We are saying, because it was 103 million barrels per day 24-25, and this year it is increased by around 0.8, and IEA says that next year also it is going to increase by again another 0.9. So around 1% or so it is increasing, and supply is there. It is not a supply deficit situation that we are looking at. So demand supply wise, rates of crude are pretty comfortable. Plus, as compared to next year, same time, we are sitting at around 10 to 12 to 13% lower rates of crude per barrel as compared to last year time period to this year time period. We are talking of average rates or so. And these are driven by, you are aware that so many geopolitical issues, trade issues, wars, all these have their effect on each barrel of the crude oil that is there, and each dollar that we spend for bringing in that crude oil. So these are the parameters. Yes, as you rightly said, that it is down by 4 to 5% marginal level, and we expect as things cool down universally in the geopolitical level, there is a potential that it can still go further down. That is our assessment, that today we are sitting at around $60 average, give and take $1, $2 here and there. We are expecting that it might come down to another mid 50s or something, or late 50s, 55, 56, 57. That is where I think it will settle down in the new calendar year that we are seeing today.
Okay, Mr. Sahney, hi, this is Harshya. In the last few months, we've seen OPEX raising output. The impact of that has not actually followed through, and I think that's one of the reasons why you're seeing the prices, or you're saying that the prices may actually fall in the new year. How is gross refining margins for refineries doing? How is that piece? And how are the cracks for various products doing? Are you able to get better refining margins?
Actually, it is a balancing game for a company like Indian Oil, or for OMCs of India, that is Indian Oil, HPCL and BPCL. We are doing on a total basis, because there are two major portions of the profits that are coming to the company, is refining margin and the marketing margin. So today refining margins are better. So my standalone refineries, they will be very much better placed today. We are also earning a good GRM today, but we are not getting that healthy margin on the marketing side. So this is a balancing act, and that is a benefit that we have for being a full-scale oil major in India, so that if we lose on one side, we get on one other side, and that's how we try to balance the balance sheet hour. That is how we are working right now. And today, yes, you are saying the refining margins were pretty good. Now they are tapering down. In diesel, you are aware that they went up to $28, $25 to our crack went up to $25, $28. Now it is coming down again to 20, 22 levels. So we don't know where it will settle down. But the conditions we know, the factors that are affecting these margins that we are aware of, as things cool down with Ukraine, Russia, but I don't know how they will escalate between Venezuela and other US, and then how Israel and Iran turn out, and then how other geopolitical issues turn out. They will have their effect on these parameters.
But Mr. Sahney, what is the kind of marketing margins currently you are sitting at? And you said that you know you are on thin marketing margins, and the refining margins are able to compensate for that. Where are you on the marketing margins at this point in time for the quarter currently?
They are very thin. I don't want to share it, but it is very thin. But we are in a healthy space because refining margins are taking care of the company's health.
Right. You also spoke about geopolitical risks, right? There is talk about a cool down between Russia and Ukraine. But then on the other hand, there is also escalation between Venezuela, or rather from the Venezuela side, which you have been talking about. Can you give us an idea of how you've been able to diversify your crude sourcing, especially when it comes to Russia, which was one of the biggest sourcing destinations for Indian companies? And where are we on that? Crude sourcing, especially in the month of December or even for the next quarter?
No, Venezuela, as of now, we don't have a very active exposure. But at the same time, we, as you are aware, that 87% of my crude is getting imported. So my primary job is to ensure that energy security of the country is maintained. And for that, we are taking all steps necessary for diversifying our crude sources. We are taking enough crude from Western Hemisphere, be it US coast, be it Canadian coast, be it Colombia coast, be it all kinds of Nigerian crude, plus the Middle Eastern crude that continues to give me the bulk supply for my crudes that are there. Russian crude is also there, but it is only a part of the whole sum. The whole sum is that my energy security has to be maintained. The product has to be given to the customer at my retail outlets. They should never be in any kind of threat. So that is the primary concern for us, and that is the primary purpose of we being here and ensuring that we will never fail the Indian consumer in terms of supplying crude or supplying products to there in our retail outlets. So that is our primary duty, and that is how we try to do this job in a commercially viable manner.
And so, Mr. Sahney, you said that you still source crude from Russia. Has that come down a bit in Q3 at all? Give us a sense.
It has come down. It has come down. Because we have to follow all the sanctions that are there, the US sanctions, the UK sanctions, European sanctions, they are there. Beyond that, if something is available in a financially viable manner, we can take it, but it has come down certainly.
Okay, and Mr. Sahney, want to switch focus, wanted to get an idea of your LPG under recoveries. You got some compensation for that. Could you give us a sense on where are we on the entire recoveries at this point in time? And if I can also ask, what is the kind of LPG loss that you have that you've clocked currently?
Exactly, it is. I don't know whether you are aware or not, but it is a buffer account that is operating right now. If we are in positive, then we donate it to that, or my excesses are kept in that buffer. Or if I am at loss, then I am compensated by that buffer. So during that process, only last 3 months back, we were like, as an industry, we were compensated not 50%, but at least 75 to 80% of whatever our claim was at that point of time. That has been compensated to us, and that will be distributed or given to us in 12 equal installments starting from November of 25 up till say October of 26. It will continue in 12 equal installments to all the three companies. So we are taking care of, in terms of what was required in LPG as a compensation for our under recoveries as of now. And then it is a running account. Sometimes it is plus, sometimes it is minus. Today, LPG prices, international prices have come down by at least $100 or so in last maybe 3 months or so. So now the dynamics is again changing. So we'll see at the end of the quarter, this quarter and end of the year, how we stand. But at the same time, we are in a very marginal under recovery. It is not threatening for the health of the company as of now.
Right. But Mr. Sahney, the big thing which everyone talks about is that crude is now hovering around $60 a barrel. What about the retail prices and fuel prices? Is there scope or headroom available for you to reduce prices for retailers?
Look, it is a very complex question and a very complex decision to make, because this is not a direct correlation between crude prices and the product that is sold at our retail outlets. There are n number of variables lying in between. For example, how is my gas priced? Because not just moving. Because as I told in the earlier question, it is a balance between refining margin and the marketing margin. If my crude prices go up, my marketing margins improves to a certain extent. If the crude prices go down, as it is going today, my refining margins are good, but the marketing margins are not there. So this is a balancing act which is going there. Plus, we have to have enough in our kitty for doing capex, because today, as you are seeing, today diesel is increasing, the demand of diesel is increasing in India at around 2.5 to 3%, which is pretty healthy at that big a base. And in MS also, in petrol, it is increasing by at least 4 to 5%, even beyond that in some of the months or quarters. It is going. Plus, aviation fuel, it is growing at phenomenal rate of 8 to 9%. So these are the kind of growths that are happening. And for maintaining our energy reliability and energy assurance, I have to go on investing in our business also. At the same time, I have to be investing in the sustainable areas of energy also. So I am investing in sustainable energy, I'm investing in biofuels, I'm investing in bioethanols and all areas which are waste to wealth kind of things. And I have to be ready to meet the customers' requirement for basic fuels that we are doing, liquid fuels and LPG. LPG growth is happening at the rate of 6 to 7%. So we have to supply those. So it's all a big jigsaw puzzle. It is not a direct relationship between crude prices and the product prices at the retail outlet.
Right. Okay, Mr. Sahney, lots more to talk about, but I'm going to urge you to just stay with us. We're going to take a very quick break and come right back to you.